Hello, what's up, guys? How are doing, my birds? It's been a long time since we had a video like this. First one was the weekly outlook on gold, which, as went we predicted on that day. Particularly that area was this area. Here we predicted on based on the volume profile levels and accumulation and uh, distribution areas. The first one which was that in this area we got an accumulation, a consolidation zone, and it was the area where most of our highs are concentrated, because at this level a lot of trading was done. And if you have to see it like volume profile levels, we particularly see this area as a point of control area. As you can see, this red line is the point of control area. So it uh, clearly shows that this area was very important for the algorithmic levels and for basic buyers and sellers. It basically shows us it, because it is a 4-hour time frame. It shows us about bigger picture. This area, as defined it before, I have done this in this area. This is also the same, because this is the half point of this consolidation zone, which is basically the upper right corner of this area where the most of highs are concentrated. Here, as you can see, the first white candle and then bearish candle, bullish candle and bearish candle would be see the momentum shift and the market comes down and it gives a reversal. But here we right on this bearish candle, we predict the market to go even lower, because we got these the fundamental macros against gold, and our US 500 was going on and on about the higher direction. So we got a little more push for the gold to go further down below, because the US stock market was going up. So whenever we have US stock market going upward in a bullish trend, we will always see gold in a bearish market or in a time concentrated consolidation area. As you can see here in this area, the US stock market was still pushing hard in upward direction. So we got this specific push here. As we can see, it gave in US stock market, if we see, it was basically a little pullback. A little pullback gave gold movement about from 4008 points to about 4159. It is basically about 1500 bits movement. That is just a basic simple pullback on US $500. So apart from that, this area exactly happened that we analyzed on 25th of October. As you can see, we were in this areas in this particular area. We were analyzing this area as our main target of uh, our main accumulation target. Now, as you can see, right at this below, we have a lot of liquidity. As you can see, this is also a volume pump. If we have this flexible volume profile a little backward, like at this area, we can clearly see that this area becomes our point of control. Now, as you can see, the price is struggling right at this area. It is because here the buyers want to protect their interest, and here the sellers were active again, but buyers are also active because this is also a high volume node. It's a volume pump for us. So this particularly gives us a strong support areas. As if we draw this as a support area, we will take this area as our support zone, like this particular area till this value high low. As you can see, this has broken past it, and then support becomes resistance for retailers. Now resistance doesn't work, the price just goes past upward direction and then comes back for a little pullback. It again fails the resistance support area. Now this support becomes a resistance, but again the support resistance failed and the price moved upward. Right now we got a pullback right at this point, but here the price respected it, so price moved upward. And this area right now we have already been as we can see on daily candle, it shows us a bullish trend, but in my point of view, the price should just close at this price or at this price. at this point of control area. If it's closed at this point of area, we will see a movement down below. If it is closed above this the daily candle high, or at 50% of this area, I will see the market is reversing. I will see this area as a reversal point, and I will uh, see this area as reversal point for the price to have another rally up to upward direction. So right now, if we compare this to US 500 stocks, we are swinging a little pullback in US 500, which is the benchmark for US stock market. So the main basic point we are trying to clear here is that when we try to connect the dots for interrelation of markets, we see a much broader vision for the markets. Now the topic was about how to mark key zones where most of the buyers and sellers are interested to trade, and which becomes our most traded value areas. So we are in daily candle. I don't want daily area because it becomes simply too large to trade on. So we will go on 4-hour time frame. Right now we will at least get uh, a week's worth or 2 weeks worth of data. Right now it can't be made this way. I will go to weekly chart. Right now we have to take the flexible volume profile, which is basically this one. We come on and we draw it from here, from the 13 October 2025 and till 20th of October. We have a week's worth of volume profile data, right? And we will have to get from 20th of October to 27th of October, but basically it is not the date we are seeing today. So we will go to daily profile, daily time frame, and drag this profile till today's day. Right now we see two volume profile. It is the volume profile for previous week, and this one is for the present week. Right now we can't mark the specific areas on this a particular price, so we will go a little down in time frames to get a much clearer view for our decision makings. Right now, as you can see, these volume bumps like this one and this one at this point of control area, which is basically the volume area high, and this is as this, and these areas, like all of these are high volume nodes bumps, and also this one and this one. If we connect it like a single slingshot, we can see that all of these areas are basically the same, basically the same, basically the same, basically the same, 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 and same. Right now it gives a lot of information, if I'm being honest here, from what I have seen in the price movement. If we were to think like from beyond the trading scope, just on the chart pattern, we can see, if I remove this one, this is what was the date of this profile. It is about 20th of October. If I remove this, if I remove this one, no, this one. Right now we can only see the data for from 13th of October to 20th of October, right? So in this particular uh, week, we see many of the areas where we were simply seeing these movements, like as you can see. Right now I'll be marking it in boxing forms like this and this. You can also mark this, but basically I don't mark these areas because those are basically the same areas, and I just sometimes get it like this. I just get the area a little smaller but at both of those peaks. and again I just took it because the point of control area is basically the largest uh, traded place, so it forms small peaks here, and I just like to have the point of control with the most nearest uh, volume bumps in a single box, and like this, and also this one, yes, and you can also add this one, but this should be on this area. We can go further down, but there specifically no area where we would want to have this one down, but this things looks like a volume bar, so I will add this one too, right? And this is also a volume bar because here we get low volume node right at this area. So now as you can see we have these that is marked right now. If we go to the date of 20th October, 20th of October, from here to today's date, right now I will be zooming. Now you can see the same volume bump is here and the same volume bump is right on this spot too, and if we go a little beyond that we can see a bump here but a low volume node here. There also this volume bump, if we count this it can auto be counted, and here this is a low volume node, but here and from the 20th of October we can see a little bit of volume bump. So when we go further down below to the point of control value area, we can see both of these areas being counted as the same on the same, but there is just a tick level of difference. It is 4113.43 and other one is 4 4115.23. It is basically the 20 pip movement, but I will just count them as the same. So if we draw this line from here to here, this becomes our average length area, and right, this bump is also here, the same bump is also here, the same bump is also here, and the same bump is also here on this area as you can see, and the same one is also here. Now I want you to think that don't count this one, this 20th of October volume profile. If we just look at this one, this volume profile, now it has the exact same volume bumps in the future volume profile which uh, was made from 20th of October. Right now if we count this one ended at 20th of October, not started. It started at 10th of October. Now this is a 10-day difference from 10th of October to 20th of October. Now the same bump, how can it be possible that this same bump is also present on the future volume profile that was formed on 20th of October? I really want you to think about this level, because this basically shows the same movement was happened right at this level, which was different between 10 days, but the same movement happened right at that period of time and right at that price time, right? The same movement happened on the same price twice. What does this indicate? It clearly indicates that someone is interfering manually here. If it is not manually, I will think it is an algorithm level, because the same thing that is happening twice is basically it's the algorithmic intervention or it is a manual intervention. Nothing else can be counted here because both the same movement which happened in past happened in the exact same price. If we don't count as time as our axis here, uh, then we can basically count this as our algorithmic level, or where the most smart money is interested. And basically it is a all-time high at 438.144. It is all-time high, and we go a little below, we can see this volume bar, but we have this low volume node. What does it indicate? Because that here the same smart money was interested, but here in this area it is already done the move, so it is not interested in this area. Now I want you to really see this. As you can see, this pump is also formed on the future 20th October volume profile, and the same bump is here, but this is a little smaller, but basically it counts. And this volume bump is not present, but it is, if we zoom it out a little, it is also present. Yeah, it's present. And the same bump happened here, but it is a little smaller. The same exact same happened here, exact same happened here. Now the main icing of the cake is here. In previous video, if you have watched that video, basically that was my first video, so there was a lot of mistakes here and then, because it was my first ever recording on YouTube. I was a little nervous at that time. I thought I just messed up. If you have patience, you can watch the whole video, so sometimes you will understand and sometimes you won't. But if you catch the point I was teaching at that point, in video that I mark this area, this little leg for the pullback, as a consolidation zone. What do I did that for? That's also a question for you and for me too. If we simply see this in retail mindset, we will see this area as a minor pullback. It's nothing special, right? But if we think like a real smart money trader, a real hedge fund trader, we will see this area as accumulation of orders for another buying position for the large buyers. That's why this manipulation was formed, and that's why this manipulation give us at this little pullback. Now, if you notice, the volume profile points this area as a point of control. So what does it indicate? It indicates that here the most of the volume of this whole 10-day period of time happened. What caused this? What caused this? You have to think it, because it is very, very, very important. I'm emphasizing very, very a lot, because it's really a very important area. So basically, or generally, if we notice it, this area is our point of control. Because of what? Because of this little pullback. But I already explained, this area is smart money entry for the further upward direction of this move. This rally here was only possible to happen because of this. If this factor was not present, I would not have said this as entry point for the institutions. I would be confused, but this point gives me a whole lot clearer view on institution positioning. And the same bump happened here, the same happened here, same happened here, and the same is here. Now if you compare this one to this one, the same value area or point of control, if we simply note it like that, is present at this one. Both are same, and the same volume bump is present here. As you can see, the same one is present here, the same one is present here, the same bumps are present right at this point, right at this point, right at this point. And if uh, yes, like here, as you can see, the same bump is present here, the same bump is present here. I have already emphasized it a lot of time, right? From the start of this video, I have been just basically shouting out loud that these volume bumps indicate main institution positioning areas. Now many of you will tell me that this is simply not realistic, but if I were to tell you that these volume bumps, these right volume bumps will give us more future direction for the next move. Now leave these bumps aside and the boxes, as you see, these are only noted at volume bumps, not at volume deficiency. I mark these boxes, rectangles, at volume bumps or high volume nodes. So basically the topic of this whole video was how we can find our point of interest. Now from the name you can very well understand these areas are of significant importance. So from what do I mean point of interest? So basically I've already explained in this 20 minutes or so that this whole volume pumps are the point of interest for buyers or sellers. Right now the gold is going in a bullish trend, so from here to here this is a bullish trend, so I will give this area as a bullish bias point of entry or point of interest. And from this point, from the right at this point, it gave a pullback, so it became a bearish trend. This is a 4-hour time frame, okay, and this can be a very well continuation of downtrend for lower time frame traders like scalpers. But if we look at it in a broad direction for the market's real direction, we will see it as a short-term pullback for another high move. Right now, if I were to be honest, if I just point on another volume profile for the whole month of October, from the very start of October to the present day, right, what do you see? We see this accumulation point, right? We see this consolidation area from here to here, and right at this point we get our point of control. Now remove this one till here, the same is basically the same, the point of control is basically the same. If I move it right at the present day, it is still the same. So what does it indicate? It's clearly and very clearly indicates that right now here the big players are entering or planning to enter or preparing a very beautiful trap for the traders present at the moment. If we really look at market in this view, the market will tell us a lot more the things that we really notice. If you had just opened the chart like this, you would seen a minor pullback here, a minor pullback here, a minor pullback here, a minor here, and a somewhat major here. But from here you will see that here the M market structure is shifted, and from here we got a change of character. But you won't have noticed that this is basically a reversal area. So from my analysis, I think the gold will reverse from here. But for that to happen, I would really want gold to pass this area from the daily area. I don't want the 4-hour one, I want daily one area. but daily gives a lot more information than Vikas thing. Uh, as you can see, the videos pause, I think. Why it is happening? Trading is really giving a lot more errors this week. I don't know what happened, but it is really happening with me a lot. And I think I need to switch this. This give me a headache, guys. Gold spot. Firms. Indices. US 500. S&P 400 is also kind of like this. Why is this happening?